Hi friends, I am Lalit. Welcome to Flirting with Finance. Today we are going to see one important and simple stock market concept, earnings per share or EPS. Let us take an example. Imagine you and 9 of your friends are starting a restaurant business by investing the same amount each. After 1 year, the restaurant makes a profit of 10 lakhs. So now the 10 shareholders or owners get each 1 lakh. That 1 lakh is called earnings per share or EPS. Now let us relate this to share market. Imagine a listed company has a 10 crore shareholders or a 10 crore outstanding shares, and the company makes a profit of 100 crores. Here the EPS is 10. So the formula for EPS is the company's net profit divided by total number of outstanding shares. One important thing to note about EPS is EPS will increase or decrease even though the profit remains the same. EPS will increase if the number of outstanding shares will decrease. EPS will decrease if the number of outstanding shares will increase even though the profit remains the same. So always look the complete picture. Generally, here EPS is good, but here EPS alone does not make a good investment. We have to see what price we are paying for the earnings. That is P to E ratio. I will explain about the price to earnings ratio in detail in the upcoming video. Thank you. If you like the video, subscribe and share with your friends. Let's make money fall for you.